Hey, hello, and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 9th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I talk about the economic data, the geopolitical environment, and how that impacts the overall markets with my market analysis. I'm going to do the same thing in these daily market commentaries, but I'm going a bit further and talking about my portfolio and how I'm implementing options in and around that portfolio to increase that overall yield. So please follow along with that. Also, in webinars that I do, I really dig down on the details around these option strategies further than what I'm going to be able to do in these daily market commentaries in order to increase your probability of success. We're not just picking option strategies out of a hat. We have specific guidelines that you can follow in order to stay mechanical around your trading day to increase your probabilities there. All right, so without further ado, let's get on with the economic data. Remember, we did have a holiday on Monday here in the United States, which has pushed back our crude oil inventories number till tomorrow. So we don't really get that at being a Wednesday. We usually look forward to that. But we did get job openings from JOLTS, and that number came in, I think it was a little bit better than expected. Yes, at 6,602,000 or 6,620,000. It was expected to be 6 million. They also revised last month's number up slightly from 5,890,000 to an even 6 million. So good data points out of the jobs market continuing. So that's good to see there that it's not just showing up in one or two of these job numbers. We're seeing those across the board, at least here in the United States. That's really the only thing we have here today. We also, we have a 10-year bond auction going on as well later on. So let's talk about the overall markets. Crude oil getting a little bit of a bump. You know, yesterday everything was falling out of bed, but today we're starting to get some rumblings. It's amazing when you see a stock market correction. All of a sudden our politicians will come to the table and start talking about it. Well, there's some grumblings that they might actually do somewhere maybe around $1 trillion stimulus package. So giving us a little bit of a boost here in the overall markets. That's going to make crude oil start to move higher as the expectation of demand will start to resurface. Also, a good jobs opening data point is bullish. Why? Because it seems like everybody is ready to start getting this economy up and running, and we could start seeing a recovery sooner rather than later. And that would increase the demand, obviously, for crude oil, giving that a boost. But we've got gold also making some moves higher here. Why? Because, again, that stimulus package, right? When we were talking about that stimulus, what would happen? That's going to weaken the dollar. If we weaken the overall dollar, that will make dollar-denominated products like gold and even crude get some move to the upside. And then we have the bonds here. They're coming off just a little bit today. I was fully expecting yesterday that we would make a rally back into that value area that I've been talking so much about, where it's right locked up between my Fibonacci, the 177, let's call it, and the 183-ish area, and the point of control being right there at about 178. Well, we're losing a little bit of steam, only off by about 12 ticks today, but I don't know if we're going to recover that bounce up into that area at least today, especially with the strength we're seeing in the equities. Now, obviously, if we start seeing some stimulus package or some talk out of these Fed governors saying that interest rates are never going to go higher, well, that would push the bonds a little bit to the upside there. All right, VIX is coming off a little bit today, and that's not a surprise as we're seeing big rallies here in the equities. You can see the Dow Jones Industrial Average almost retracing all of yesterday's sell-off. We did close very near the lows of the day yesterday and even opened up lower across the board in the equities, almost like a bit of a gap down. We'll see that show up in the E-mini S&Ps, where they kind of even gapped a little bit further. But once we started seeing some of these politicians talking about stimulus again, you can see that's been a total upside move. And really, almost like yesterday, we weren't seeing very many green candles. Today, we're not seeing very many red candles and trading near the highs of the day, with the Dow Jones up almost 500 points as we speak. NASDAQ leading the way to the upside, up 3% and up 345 points on the day, near the highs again. Yesterday, we did come down, something to note, and kiss that 50-day moving average, really just kind of plopped on it and kind of sat there at the end of the day. Today opened up like again with a gap down there on the opening, but has been almost what's felt like unabated upside move in the equities throughout the day so far anyway. E-mini S&Ps are up 71 points, testing that value area high. You know, overnight we did test the 50-day simple moving average. That just seemed inevitable across the board there, right? But now we're starting to make some moves and the market's starting to really turn around after we did, you know, get into basically a correction territory type scenario here. Now, I don't know if we're necessarily out of the woods yet, you guys. I don't know if this is all completely over. It's going to be mostly news driven, or what we're going to be hearing out of some of these politicians as to what we're seeing with the stimulus. But we are seeing these COVID numbers really precipitously drop off there. So we might be out of the woods and be able to take off our masks pretty soon when we're in public. Anyway, we've got the breakdown of the mini S&P. You can see here, this is on the daily chart. Open up. This is that gap that we saw across the board in equities from where we closed to the overnight session. But pretty much, like I said, not a red candle really to speak of. Yeah, there's a couple of them in the overnight session, but today we only got one, and this is a 30-minute chart. So very bullish and peeling up towards the highs of the day as we're talking now. I sped through all of this because I want to make sure I gave myself enough time and not really drag this all out, but I want to talk about this BABA trade that I put on yesterday. Look at this. It's starting to bounce back $5 on the day. Now, what would we expect? I sold some calls in there because we had high implied volatility, right? I was taking advantage of that. I think the implied volatility percent in this yesterday was around 60 some odd when I put this on. Well, we can see what's happening with volatility. It's really coming out. So something to note here. We've got a $5 move to the upside, right? I just sold these calls yesterday, and you can see the yesterday when I sold those, well, we're probably higher than where we were when I sold those calls yesterday, right? But in that time, you know, from basically Tuesday or Friday even, Tuesday here, and then we got Wednesday here. So we can see that that volatility is really falling out of bed and probably trading at a higher level than where I originally put this trade on in BABA, right? So what could we expect from that? Well, we would expect that this would start to become a losing position rather quickly. So with that being said, you know, I did it around this time on Friday, or sorry, yesterday I put this trade on early in the morning actually. We did get that sell off throughout the day, but volatility was coming out from what we saw when I put this trade on. And I think I put it on when it was trading around 54. So the implied volatility was right around 54, I think, when I put this on. So we go from 54 when I put this trade on to 46 right now. So we're talking 8 percentage points, right? Now, I talk about this in detail in my webinars, so please go back and refer to those as I might brush over some of the nuances there. But if we go over and look at the trade page of BABA here, so I'm going to slide this over so you can see it. So we've got BABA lined up here. You can see I've got a buy order in there to get out of this. I don't expect to get out of it. I'm trying to get out of 50% of max profit, and that's $1.40. So that's not going to happen, at least right now. But what I want to talk about here is we have a $5 move higher, a $4.50 move higher today. All right, that would cause my premiums to increase, right? Now we talk about delta is the probability of being in the money, but another thing is for every dollar move higher, my premiums on these 330 calls should increase by the corresponding delta. Now, that delta is 11. We've got a $5 move higher, so what does that equate to? Around $4.50, or sorry, should increase by about 45 cents or something, right? 0.11 times the $4 move. So right around 45 cents, you know, give or take, just off the top of my head. But We're also talking about an 8% move down in Vega. Now, how does Vega apply? Well, Vega, for every 1 percentage point move, our premiums will fluctuate by that. Well, I've got a negative Vega going on right now, right? We went from, what did I say, 54 to 46. So that's an $8 negative Vega move, percentage point move. So a negative plus a positive Vega. Vega's always positive, but we've got a negative Vega today. So a negative Vega is negative to that number there corresponding to my premium. So if we look at it and we say 8 times 17, basically we are looking at somewhere around, what is that? I'm drawing a blank here, 8. So about $1.20 or so move to the downside, right? Give or take on that would be, yeah, about $1. So basically what I'm seeing come out of my premiums is, you know, $1.20 minus the 45 cents. So about 80 cents coming out of those premiums between yesterday and today, right? So that is the value in trying to create something where we have a move where we're trying to set ourselves up for success. We can't always implement a strategy in and around the perfect directional move. Well, you know, I mean, our directional assumption is just that. What is assumption? It makes a, you know, out of you and me. Well, what we did here is, yeah, I have a bearish assumption in BABA. I've gotten this bounce today. The market's been moving against me, but because I picked the specific strike location that I talk about in my webinars and the volatility coefficient that we specifically lay out for when we have a bearish assumption, what determines a selling calls or call spread, right? Which we just went over in the webinar. So check out the roadmap to trading options there. You know, I can be wrong in a situation like this and a $5 move higher in the underlying, but because I set myself up for success with the premium being inflated, or I got in a situation where I was selling premium that was just jacked full of volatility, well, I get that volatility crush where we were seeing in that chart, in this chart here. This is, you know, specifically volatility crush just coming out 8 percentage points in a day. And that supersedes the directional move against me here in BABA moving to the upside by over $5 now, just kind of jumped there. So setting ourselves up for success, and the only way to do that is at the inception of these option strategies, you guys. We aren't always directionally correct, but what we want to do is we want to swing for singles, doubles, and triples, right? And the best way to do that is to get yourself into a situation where you are not behind the 8 ball. You are not stymied by implementing these strategies incorrectly. There are specific guidelines that we follow in these webinars, so please check those out. Go to protraderstrategies.com. You know, when I'm directionally wrong, I'm never more happy when everything else falls in line like this, and I drill like I beat down on it like it's a dead horse, you guys, about volatility and how to implement option strategies in and around that, more so than even caring about your directional assumption. Because when we are wrong directionally and still making money, there's really nothing better than that, right? So that's all I got for you guys. Please take a moment to go over our disclaimer, as we are an educational company. And we're just trying to educate you guys on option strategies, when, where, and why you would want to implement a specific option strategy around your assumption. And Baba's a perfect example of why I don't give trade recommendations. I give option recommendations as to how to trade those options. You don't necessarily need to follow my directional assumption, because I could be wrong. And, you know you can go out there and find all these people that say that they are directionally right, like, all the time, because all they do is cherry pick their best trades and say, hey, we were right here. You could have made 550%. Well, I'm the guy that's going to tell you, hey, we were directionally wrong. We made a mistake here on our assumption. It's going against us right now. But The fact of the matter is we set ourselves up for success and we're making money. That's all that matters. All right, so check those out at protraderstrategies.com. Make sure you know what your risks are involved in with trading by reading over this disclaimer. That's all I got for you guys. Other than, if you can't take that, take it easy.